All right, mate. Let's have a look here. Yeah, so the last one of the last videos. I mean, I'm sure it was a long time ago if I said that. The dip has been obviously a lot worse than we kind of imagined. Well, when you're up here, it's hard to imagine. It goes straight down to 20 cent. But when I don't know where we were then, but if it went down to 60 cent, it was a big level. It's right into the previous highs and stuff. So you want to see how that level holds. Let's just draw a line on it just so we can kind of have a look at it. So you can kind of see there. My thought probably at the time was if we do actually come down. Well, the moving averages are here, but not only the moving averages, it's this previous high. So, I would need to watch the video again myself, but, you kind of thought, well, did I say if it gets below 60? Yeah, if it gets below 60, buy with both hands. Yeah. Listen, I think FTM will be great in the future. My hope, now, I don't know if this is going to be gospel or not, but I think that these bounces can eventually bring us, and maybe it might come off it now because we've just got this rejection to the downside, and my thought process for this and almost an entire market is that, and it might start right now, right? I'm not sure, but that we move up and we come up above the red 200 moving average, right? I think after there, I think this market goes back down to new lows, and somewhere here we bottom out below. We bottom out below here. Now that's my game plan for this market at this point, and I think here is the lows of the. I think down here is going to be the lows, but them lows might not happen for 6 months or so. It is tough to say. And my thought process is that we should get a bounce up here first at some point. Now, I love to see this rejection here, or this bounce, this recovery, because it might spark a move into the red 200 moving average. It's very possible. I'm unsure yet. We need to see more action, but it's you're kind of knife catching right now on the hope that it will go up here. But I do think that the first bounce will be a sell-off to go to new lows, and then we bottom out somewhere just below these lows here, wherever this first base is at that time. So that's kind of my game plan for the market. Now that's a slightly risky game plan because is buying here not okay? Like if you're buying here for long term, it's a decent place to be buying long term. But as I always say, you always need to be prepared to go lower, just in case. So if you were to buy here and sell above the red 200, what if it never? What if it done something like this and then we went? That's always a possibility. Of course, the other way would be to you buy here, sell half up here. So if it comes back down to here, you're still actually in profit. And even if it goes lower, you're just eating into the profits you made off the first trade. So maybe you'll still be break even if this first half position comes down at a loss, and then you can buy more and lower your average, and then you even have better average for whenever eventually it does run. That would be a way of protecting yourself in case we do drop down again. Now, not easy to see it here, but I should have went on a bigger screen. But you can see here that a BNT, similar-ish, it had the bear market. We had this kind of move right here. We had this move here. But BNT ended up dropping. I should squinch it up a bit because they look a little bit different. But you can see here, that's a 95% drop, for example. And if I just take a rough measurement here, right to the very lows, you can see it's about an 84% drop. Very similar in the drop, actually. But you can see what happened as well. You get this move and you eventually move into the red 200 moving average, but it drops down again. And obviously the buy below the first low was the buying opportunity somewhere down there before it went 100x, or I shouldn't say 100x because I'm guessing on that. It's probably nowhere near 100x, but Not bad, 40x. Okay, so that's obviously if you caught the lows or close to. You could have got actually way better. All right. Okay, so somewhere down there, that's a 60x. Okay, 63x if you actually got very low. I think we're kind of in something similar to this. Now, this is not the same because this broke down below the white 100, but it's still the first base. This whole thing to me is classed as the first base, in my opinion, in my eyes. I am classing the entire thing as the first base breaking off the lows. Now we need to see, does this move up into the red 200 moving average, or has this consolidated for another wick down? Now I know it's not going to 0 or minus, but I'm just trying to give an example, and then we bottom out, for example. So we just need to see how this moves, but I do think that there should be a move into the red 200 at this point. And at this point the line in the sand is yesterday's low, right? We've put in a major low, a major reversal low, a major a stop hunt low for many coins. It's a big open wick. Now you can see here we had a big, it actually got filled a bit. These wicks did not get filled at all. It leaves me a little bit skeptical in the fact that we could come back down and fill that maybe before going back up. Now again, it doesn't have to get filled. It does not. Like you can see here, we got this big large wick, but we came back down into it and then moved. That's what I wanted today. We didn't get that. We're moving up without filling it, which it leaves me a little bit skeptical. And I think you asked, am I an FTM? I'm not an FTM. I can't buy every coin. Would I like to buy it? Yes. If we, because you don't want to waste all your money. Like I'm holding 15 or 20 coins at this point. I don't know how many coins I'm holding, but I'll say 15. But I need money to be averaging down if we go lower. I need money to protect myself. So I can't over expand on too many long-term coins, even though I want to. But if we do get what I think is going to happen, maybe later if we actually get there at some point down to these new lows, well, that would be a point where I would consider buying a lot more different coins if I've averaged down efficiently into my original investments. So that would be the place I would be. If we got down there, then any spare money and all that I had, I would probably be looking to start buying into other coins. Of course, you always need to keep some money to protect yourself, but any money available for long-term investing. If you believe in crypto, you have to believe that this can recover. So as we've seen, this was a 94% drop here on FTM. Another example here is XEM. This is XEM here, and you can see what happened. Well, this actually dropped. See the way this didn't. Let me move that up. So you can see here that's a 95% drop. This was the kind of worry that I had, that maybe this just keeps going, and you get the bear flag at a 95% drop and flushed lower and stuck under the moving average, because it was only later that it got to move back up into the red 200. That's the worry. But and we are still below it here, so it's still a possibility. We need to recapture the white 100 moving average, to be more safe. FTM is probably a lot better project than XEM. XEM from 95% down, well, you can see where that was, 95% down. There was still the drop was still down below that, and it had bottomed out below there, of course. If you're buying some FTM in this area, you always need to be prepared to average down, because in very bad bear markets, these coins can go lower. So yeah, if it does go lower, you always need to be prepared. That's the most important thing.